David Bahnsen joining me this morning. I want to ask you the question that I've asked everybody else, but I've asked you before as well. Are we in for a melt up on the stock market?
Yeah, it's very possible. Melt-ups don't usually end very well because they are subject to bounce back when valuations have to compress. And so when things continue melting up, that generally ends up being sort of a blow-off top. Right now, you see markets barely moving with this announcement of a trade deal. So I do think more and more of the things markets have been expecting are already priced in. So it explains the melt-up of the last couple months, not a future melt-up for next couple months.
So what's the most important factor this week? Is it big tech earnings? Is it the rate possibility of a cut by the Fed? Is it the jobs numbers? What is it?
There's a 0% chance of a rate cut this week, so that's not on the table. But the way the Fed talks about the future meetings, that's a factor. And yes, big tech earnings is a big factor.
Jobs not count?
Everybody kind of knows that we're going to come in at about 4.1, 4.2% unemployment rate. The actual number for one particular month doesn't move markets. It takes 3 or 4 month averages to move markets.
But if all these indicators are relatively positive, the rally continues.
Or at least it doesn't fall off because, again, the rally doesn't need to continue. It just has to sort of stay level because we're already so far up, Stuart.
Yeah, we are. It's been an extraordinary rally since the April low. I think the NASDAQ is up close to 40%, isn't it?
Well, I would go back further than even there because the NASDAQ was at one point down almost 30%. So most of that rally was coming back and recovering. But just where we are over 2 or 3 years now is really remarkable move up in markets.
Where we've been for the last 12 years.
Well, we can go back all 100 years.
Well, you and I have been sitting next to each other for several years. Yeah. And in all that time, basically the rally has continued.
Yeah, we've been in a very secular bull market. There's been pullbacks along the way. Sure. There will be more, but this has been quite a run.
If you'd had your money in your 401k in stocks 15 years ago and you didn't move, you're doing okay.
Yeah, hopefully most people in their 401ks did have at least the lion's share in stock market in some form because that long-term money should be in a long-term asset class.
Right. Okay. Stay with me for the hour, please, David. I'm breaking the format for 30 seconds. David.
Oh, my gosh.
You were never keen on tariffs. No. Are you keen on tariffs now?
Absolutely not. And I do really think the administration takes a big risk here in celebrating prematurely, saying the tariffs have all worked before it's all started. It takes months to see the economic impact. There's so many carve-outs and exceptions and everything so far. People talk about the last couple of months as laughable. We'll see where it goes. Some deals are better than expected. Some are much worse. A lot of it is hyperbole, but I look forward to see where it's playing out. What I will do, though, is tell the truth. I will celebrate where it happens, but people celebrating before anything's happened is just political.
David, I'm going to rebut that. I understand that 50% tariffs on a bottle of wine may give people pause. 15% tariffs on a bottle of Pinot Grigio from France is giving 0.0 people pause.
Yeah,
nobody
cares about one tariff on one product. The issue is systemically. Is even the language used that we're bringing in money to Treasury. Nobody talks that way about income tax. No one talks that way about any other tax. It's a tax on the economy. It's offsetting the huge benefits we got from the big, beautiful bill in the corporate tax code. So they're basically saving corporate America about $250 billion in one hand, charging it to Americans.
David,
anybody who thinks foreign countries are paying that is wrong.
I legally have to pay taxes. I don't legally have to buy French wine and champagne.
Okay, well, there are things you do have to buy from imports.
What?
American coffee.
What if I don't drink coffee?
Okay.
The point is I have to pay my taxes.
You can't. Okay. My point is that semiconductors, industrial machinery, there are things that our economy won't function without. And the whole point of the thing was that they said they want to bring more jobs back to America. Let's look and see what happens, and let's see what the economic impact is.
Time's up. David, let's come in, please, on a big picture here. Has AI yet proved its value?
The answer is yes and no. It has absolutely proved value. But what exactly the value will be, how it will be manifested, what companies will benefit, there's a huge to be determined there. That there is value that will come of it, indisputable. What it will manifest as in the years to come, I think, is a big question mark and a big opportunity.
The EU pledged to buy $250 billion per year over 3 years of U.S. LNG. And
yes,
that is
but
a huge
$250 billion a year.
of U.S.
For one continent.
The liquefied natural gas. It was brilliant of Europe to wait for this deal because they absolutely had to do that anyways, or they'd be dependent on Russia forever. Now they got to put it into this deal. Great win for these companies.
Huge amount of money. $250 billion every year for 3 years.
And all the jobs that can get created being a part of it here in the U.S.
Yeah, really.
The steel and aluminum tariffs are staying at 50%. You do have zero tariff on some aircraft and some chips. So I'm curious if there's a carve-out or a sweetener for military equipment purchases which use steel and chips.
Good question. What do you make?
There's going to be a lot of carve-outs. There's a lot of crony deals coming. The steel and aluminum tariffs at 50% are devastating. They can't stand.
But $600 billion worth of U.S. military equipment over 3 years? $600 billion?
That's the investments into the U.S.,
not
maybe
military
private investments.
Oh.
The military is separate.
Okay.
So about $500 billion of that was going to happen anyways, but there's new commitments, yes.
Okay, we're still talking a lot of money.
Yeah.
Okay, now let's get to the suggestion that Tesla will be worth $20 trillion by 2040.
Well, there's a $16 billion deal for Samsung. If you get another $29.8 trillion, maybe Samsung can be a $30 trillion.
Okay, enough of the sarcasm. $20 trillion
When
by
people say
2040.
something just has to compound at 20% for 15 years, and Apple's already done it, I don't think people realize the math of that. So many things change in 2 years, let alone 2 decades. That growth rate already off a company like Tesla that is already over $1 trillion valuation. It is just simply not the way the U.S. economy works. Too many things come and disrupt and shift and move. By the way, the whole entire U.S. economy, GDP is $30 trillion. So to be a $20 trillion company, Tesla is going to be 2/3 of the current U.S. economy? I mean, come on.
You're a skeptic, I can tell.
I think that Tesla has a lot of capability to grow. It trades over 100 times earnings now. And I love the comment that he has to be laser focused. I agree. That's not about politics. He's also running SpaceX. He's also running 4 other companies. One of them called Twitter X, right? He's got a lot of things going on. So laser focus is not one of them.
All right, you brought your dividend picks. You're going to start with Blue Owl Capital. You've been there before.
Yes, we want to keep coming back, especially after Blackstone's incredible results last week. Blue Owl is another alternative asset manager, private credit, private equity here in New York City, and they have not ramped up to $1 trillion plus company the way Blackstone has. They're in a smaller stage, big time investor, big dividend, big growth of dividend.
Blackstone raised the dividend by 25%, I think.
25% year over year, 10% on the quarter. Right now, since we first bought it, the dividend is up about 700%, and they continue to grow. They are the leader, $1.2 trillion in assets they're managing. When I first recommended it to my friend Stuart Varney, they were managing $200 billion. They've grown 6 times since we had that conversation.
Yeah, it was a good recommendation, and I thank you very much indeed. Any comment on a split market, David Bahnsen?
No, we've had more days like this lately, and then you see the S&P right in the middle there, just dead flat. But just remember, markets do not respond to news most of the time. They are pricing in news before it happens. Markets are forward-looking. More investors need to understand that.
That's why the melt up is coming. Believe me, it is. Okay, David, thanks for being with us for the hour. We appreciate it. Thank you.